right, the CPI report came out today. I was out fishing, so I wasn't really concerned about it. I didn't think it was going to be great, but it came in softer than expected, so the market exploded. So if you look at what happened this morning, let's take a look at some of these. This is semiconductor. It shot right up at 5:30 in the morning. It shot all the way up to almost 15. Now and then it dropped. Okay, and then you'll see all of these shot way up at 5:30 in the morning, and then slowly trended downward. This one is the tech and the web fund was the last two. This one here is the biotech. Shot straight up, trending down, actually came back up. This one here is the home builders one, skyrocketed right up almost to 38, finishes all the way down to 35. Again, here's your mid-cap funds. So the mid-cap sector shot straight up, still did good, up 1.87%. That's a very good day to end on. But look how, why is it trending down? Why are all of these shooting, skyrocketing up, shooting back down? This is the small cap sector, the Russell 2000. Okay, still finished at 2.4 above, but man, it was way up high, almost up to 40, and down to 36 right now. And then here we have utilities. So in hindsight, I probably should have just sold immediately at 5:30 this morning and just took my winnings, but I was busy fishing. So anyways, let's get rid of this. Again, you can see the market shot right up at 5:30, and actually is down after market. This is the utility funds. Okay, so those are just kind of some broad funds that I'm following, or I'm actually invested in. But you might wonder, well, if the news was so good, it came in softer than expected, why didn't it stay high? Well, it's not going to change where we're headed with the lost the page. The CPI report that came out today. It's still going to keep the Fed on the same playbook as before. They're not going to change. They're going to raise rates. This CPI report was softer than expected. The expectation was a 7.2% rate of growth, which is pretty high. We're looking to get 2%, and we're at 7.2% instead. And what was softer? Softer was 7.1%. 7.1%, to me, that's 7.2. That is what's expected. So what happened? Yeah, it shot up on the news. Look at Tesla, shot up on the news, but look, it's actually down. It's on a downward trend because that news that the CPI report is softer than expected, it had nothing to do with really what we need is numbers going down to 5 and 6%. Start seeing a downward trend. 7.2% to 7.1% is not much of a downward trend, and not really an exciting reason to go and buy. For some reason, Amazon's chart is not showing. Bitcoin actually shot up, and it's actually been pretty level, but it's a very risky thing, and you're only at 3%. Okay, even when it shot way up, it's so much more risky and so much less gains. I don't know. For me, it's not an investment I'm interested in. Even Microsoft, yeah, shot way up, but it's not even down that. It went from 260 to 257. That's not that much of a percentage change. So again, you got the quick money is definitely in the direction funds where you're doing triple options on your investments. All right, so that's what happened today for the CPI report. It came off better than expected, but only by 0.1%. And better than expected. Expected was to be too high in the first place. We need rates down to 2%. That's what will show the ability to stop raising rates from the Fed.